With us now, Cboe CEO Craig Donohue. Craig, first off, thanks for having us in your house. Appreciate it.
My pleasure. Welcome. We are so excited to have CNBC on the trading floor. Thank you very much.
We tried, I think, to tell the story. People think everything is computer. The women and men that are here, so critical. Explain to our audience the importance of this, what they're seeing right now.
Well, this is a hugely important part of our business, and you're right. I mean, the whole industry has transformed much more toward electronic trading. What you see here is sustainable. This continues to be a growth engine for our business. And you can't just look at it just in terms of the activity on the floor. You have to look at it, all the large institutional orders come here, and that drives more business into other of our products, so there's knock-on consequences. The floor is hugely vital. It's an important part of who we are, and it'll continue to be as we continue to grow and expand.
As I was chatting with people down here, they were explaining, look, there might be mega institutional four-part trades that need to be paired off and executed at the right price. This is not the same as it is at the New York Stock Exchange or something like that, where even though the equities here has gone electronic, for the most part, that piece is harder to replicate. There was a time after the financial crisis, the derivatives was much more of a dirty word. Now it seems that this area has grown even more as a vital part of the markets. This behind us, this S&P, I mean, this is one of the most liquid, probably the most liquid contract in the world. Can you talk about that, and do you expect that to continue in that direction? How much more can we go in this? Can it continue in this way?
I love that question because it's so right. These are insurance markets essentially. I mean, basically what we're doing is we're allowing people to protect their investments, to hedge, to transfer risk, and that is fundamentally what we do. And so, right now we've had explosive growth for more than 50 years, and it's continuing. I mean, the growth in the last 6 years has been hyperbolic. And you step back from it and you look at it and you say, well, where can it go from here after it's had all that growth? But the reality is that, retail participation is, on the ascension. People really understand these products. We have a lot of really sophisticated young retail traders. They're trading like institutions. We actually look at their trading strategies. Zero DTE options, for example.
Is that considered insurance, though, or is that just betting?
Well, there's in risk transfer markets, you always have hedging and you have speculation. And you can't have hedging without speculation, because if there's no speculators, who's going to hedge?
Exactly.
Exactly. So it's a little bit of both, but, we pride ourselves. We've been doing this for 50 years. Investor education. We teach people how to use these products prudentially.
The rise of the prediction markets has certainly been, I think, the speed and rapidity and sort of size of these markets has taken a lot of people, including myself, by surprise. This is not a market that you guys are ignoring. It is a market that you are exploring or even getting into. Where are you? I don't know what you're allowed to say, what you can say legally, because you are a stock and you have rules yourself. Where are you in the prediction markets game or business, whatever you want to call it?
I love that question. So first of all, just to maybe at the highest level, we're not interested in prediction and event stuff related to sports or what you think of as like gambling and gaming.
Weather, elections, things like that.
Yeah, pop culture. What we're interested in are short-term, event-driven things that relate to securities, the decomposition of an equity security, economic events, financial events, things that people can express an intelligent opinion on. And so we're really excited. We've launched event contracts, style contracts that are a yes-no on the S&P 500. We call it XSP. It's our mini S&P SPX contract. And then we've done something super innovative, which we've embedded a way to trade where you can basically, we call it the plus contract. It's basically a vertical spread and allows you to be right even if you don't hit the number. So as an example, if the S&P 500 reaches 7,400 today, a binary option, it has to reach that level to pay. But if you trade this plus contract, as long as it's directionally correct, if it gets to 73.99, you're still going to get some payoff. So that's super innovative. And that's just the beginning. We're about to launch some new things. I'm happy to talk about that.